Welcome back. I'm Ted Thomas, and for the past 30 years, I've been involved in an alternative category of real estate. It's really a subset of the real estate business. Now, the category I'm referring to is tax deeds and tax liens, which I'm about to tell you about in this episode. I'm going to give you some opinions about why investing in real estate is better than stocks. For sure, you can expect different opinions from a stock marketing expert. In today's world, everyone has an opinion. Now, I've noticed, just like you are, that it's wise just to listen. Why? Well, you have to think. No joke. Who are you listening to? Ask yourself that question. Who are you listening to? What I mean is, everyone's got opinions, but some opinions are not valuable. My simple rule is, don't take advice from people that are not already successful. Now, what do I mean by that? I mean simply this. Do they have a high income and a net worth and they earned it all themselves? Or do they have a massive amount of experience doing something that you'd like to learn about? Well, then, those are the people I want to listen to. Everybody else, it's not going to work out so well. Now, of course, all of you have noticed that there's people with zero, I said zero, no knowledge, yet they give investment advice. What is that all about? It's like a plumber telling you how to buy stock options. They have no experience in the world of stock options. They're living from paycheck to paycheck, and they're loud as they may talk. It doesn't make them an expert. So be careful who you listen to. In today's episode, I'm answering from my perspective why real estate is better than stocks, and I'll be right back. To start with, most of the people I associate with make their money in real estate. They study real estate, they know about real estate. Maybe they buy, maybe they sell, maybe they do both of those things. Of course, they cooperate with other people like real estate brokers, attorneys, and title companies, so they know about real estate. So my point is, if you're doing this yourself, it makes a huge difference. You not only have an interest in it, but there's a big comparison that's much different between stock and real estate. The reality is, real estate is hands-on, independent people and others who work from a distance that are stock market investors are much different. So the people that invest in stocks, they're looking at the category of stocks and they're analyzing the stock. They're looking at what the company management does. They're looking at the employees of the company. They're looking about how far away the investment might be. Are they looking at what the company really does? Are they looking at, do the executives really know how to run the company? Does the management really know how to manage the employees? They need to look at all those things. All right, it's altogether different in real estate. You're going to be hands-on. You're going to be close to it. So stock market investors are investing in companies. Now, people run those companies. Now, some of them are just excellent at running companies, but there's many that are not. And some have large groups of employees that they don't manage. What if they have people that aren't doing a good job, which aren't creating the right thing? Now, in today's episode, I'm answering your question, why investing in real estate is better than stocks. And it boils down to this. It boils down to real estate is hands-on and you're paying close attention to it. Stock market companies have employees. Generally speaking, they have very little interest in the ownership of that company. If they have very little interest in it, what's going to happen at 4:30 in the afternoon if some challenge comes up? Because these investors are only interested in the ROI of the investment. Real estate investors have a major interest in the outcome of the property. Well, they're not so much interested in companies. They're interested in the actual property. So they're going to be hands-on, and they're going to have a lot more responsibility as compared with employees or managers of big companies. Now, most employees go to work, they follow the rules, they work hard, but when it comes time to 4:30 in the afternoon, 5 o'clock, they're headed for the parking lot. All right, does that make them bad? No, of course not. They're not bad. It just means the company problems are for the management team. All right, now if the management team is doing a good job, that's great. But what if the management team is absent? They've gone on vacation or they're at another facility. A small crisis could turn into a big, costly, losing disaster for the company. So it's simple. It's like a fire in the kitchen. If the fire is in the oven, well, probably not going to cause a lot of problems. If it's tended to right away, you'll put it out and there's not going to be any real problem. However, if no one takes care of that fire, what could happen? Well, you could lose the whole house. Well, it's the same with stakeholders. Who's taking care of the stock? I don't know, but many investors lose money because the executive team, the management team, they don't care either. So if they don't care, what's going to happen to that investment? So with real estate investors, they're basically hands-on. They're moms and pops. They're handling one house or two houses, but not dozens of anything. It's not a streamlined business by any means. It's just a business that people are doing hands-on. So management of real estate is hands-on. That's the problem. You have to manage it. That's a big negative nobody wants to talk about. You have to manage real estate. If you don't, you're probably going to have big problems. Now, fixer-upper people, they love to fix the properties up. They're really hands-on. All right, so these are good investors because they're paying attention to what they're doing every day. Now, investors, what do? They research properties. They look at the management team, hopefully. They try to figure out, is the company going to do a good job? But they have to have an awful lot of faith in that management team, because if they do a bad job, guess what's going to happen to that money? Now, stock market investors are always concerned. They don't have a lot of say-so. They don't get to say. The only time they ever get to speak to anyone is to go to a board of directors meeting. So they're not going to say anything about running that company. Otherwise, stock investors just have to be silent. They have to just sit there and wait and hope that management steers the ship and that doesn't run in the rocks along the coastline. All right, so it's a lot different with real estate investors. What do? They're hands-on. Most of these people are managing single-family homes, or maybe a few of them, but they're not managing massive amounts of property. Some of their properties are in distant locations. Maybe they're at a lake, maybe they're at the mountains, or maybe they're a rental property. But they're hands-on. They're going to go check that property and keep an eye on their investment. That's a lot different than stocks, where people are basically getting out their phone, pushing a button, or opening up a laptop and pushing a couple of keys. So they're buying and selling very quickly. So the huge advantage comes in the buying and selling. How does that happen? Well, the buying and selling of a stock, there's no work to do. You push a button and it's sold. Whether you made money or lost money, well, who knows? I don't know. You sometimes don't know. The management of real estate, those people are going to be involved in every step of the way, hiring the broker, firing the broker, determining the price, determining the financing. There's going to be a lot more to it. So the people that have any management skills at all find real estate easy. When people start in real estate, they have to develop those skills. So a stock company could be doing great. The manager could be doing a perfect job, but how will anybody ever know about it? There's no way to talk to them. There's no way to get close. You just look at the stock price. Now, if the news is good and the market goes up, you're great. If the news is bad and the market goes down, it still might be the same great stock, but it's going to get pulled down by all the others. All right, so real estate investors really have real estate on their mind. And why do they have it on their mind? Because that's where they're going to make huge profits in terms of what they invest. A small $10,000 investment could turn into $20,000, $30,000, or $50,000 just on one investment. Try that on a stock. Probably not going to happen unless you started out with Apple or you started out with Microsoft when it was brand new. But making money is a number one priority in real estate. Pricing the property is number one. So that's how they make their money. So many real estate investors are wrong when they think that real estate always goes up, because it doesn't. The truth is, real estate will go down in recession markets and goes up when the market's advancing. So you need to know that. So there's a time to sell the real estate. Some people believe they buy the house, and like their dad, they keep it for 30 or 40 years. Well, if you keep it for 30, 40 years, you're probably going to make money. But there is money to be made in real estate by buying and selling at the right time. Now, this is not a timing letter, but you're getting the idea. So why is investing in real estate better than stocks? Because it's hands-on. So, for example, there's a professor at Yale that belongs and writes a newsletter. He writes a newsletter about what's happened in real estate over a period of long time. So, for example, people say, I doubled my money, I tripled my money. Well, real estate actually, in the last 100 years, according to Robert Shiller of the Yale University, he's a professor, and he researched it. Real estate's only gone up 1% a year for the last 100 years. So the point is, there is cycles in real estate, just like there is in the stock market, up and down, except the stock market could be daily, whereas real estate is usually over a period of time. The point is, there's plenty of money to be made, But the real estate investment is something you can see happening right now. The stock market, you can definitely see that happening right now, but it might be on its way down for the next week, and then the following week, it's on its way back up again. All right, it all depends upon the media. What's the media doing? The media is telling people good news, bad news, good news, bad news. If the media says everything's great, that the real estate went up 10%, did it really? No, it didn't go up. This particular market cycle is pushing it up. It could go back down. So if it went up 10%, what if it went down 30%? Well, then you say, well, that's just like the stock market. Well, take my word for it. That same thing can happen in real estate. So how do you solve that problem? You solve that problem by buying the real estate at the right price. That's right. You want to buy at the right price, and then if there is inflation and it pushes the price up, well, you're going to have a benefit there. But if it pushes it down, if you bought at the right price, like at a tax auction, for 20 or 30 cents on the dollar, you're not going to get killed like an awful lot of people do in the stock market. All right, now if you can buy at the right price, by that I mean at a tax auction, and you can buy the property for 10, 20, 30 cents on the market, that means you got a 70 or an 80% discount. Try getting a stock for a 70 or 80% discount. It's not going to happen. It's not going to happen at all. You're either going to buy it or sell it at the market price, or you're not going to get it. All right. Real estate investors create money. Now, how do they do that? Well, you can create money by being a developer. What's a developer? Well, they're basically a visionary. What do they see? They see a big open piece of land, and what do they envision? They envision roads there. They envision trees. They envision many houses all built. They build subdivisions. Okay, they create money. They create value. That's important. Well, there's lots of different kinds of developers. There could be a developer that looks at the ghetto and says, look, I could clean this off. I could put new sewer pipes in. I could build subway trains. I could build high-rise buildings here. I could build other business buildings around it. The point is, they're visionaries. They're creating value. They're creating value. There's other developers that think about taking old buildings and making them like new buildings again. All right, so what about the regular investor? The guy or gal that can see one man's garbage and make it into another man's gold. They know how to take that old house and rehabilitate it so it looks like a new house, and that's another man's gold. So what did they do? If they did it economically, they're going to make a profit. Basically, they're creating value, and if you can create value, you're going to be successful. Finally, there's the people that do an alternative real estate like I do. What is that all about? Well, we try to buy at the tax auctions because these auctions are selling property at such low prices. Owners didn't want them. The county doesn't want them. Nobody wants them. So they sell them at huge discounts. When they sell at those huge discounts, we buy it low and then we sell it low back into the market. So we buy it as a default. We sell it. It goes back in. It becomes a property on the tax roll, honorably paying taxes. We're creating value. If you create value, you're going to do well. Very hard for you to create value in the stock market. It doesn't mean you can't. What you're going to do is you're just going to buy the stock. And if the management team does a good job and the board of directors do a good job and the markets all work, it may go up. And if it does go up, you're going to benefit. All right, the point is there's a lot of difference in these two kinds of investors. One is hands-on, the other is not. So the hands-on investor is trying to control their own destiny. The people that are buying into stocks, if they learn how, they can do just as well, if not better. However, they always have to have faith in somebody else. All right, my name is Ted Thomas, and right below me is going to be a free gift for you. But before I go, be sure you understand that if you're buying real estate properties and you're buying at the auction, you want to have boots on the ground. Why do you want boots on the ground? You want to make sure that there's been no windstorm, there's been no hurricane, there's been no fire, and that you're not next door to a chicken farm that's going to smell bad in the summertime. So you want to make sure that you've been on the property or someone you know and trust has been on that property. Secondly, if you're going to buy at auctions, you want to know what your exit strategy is. That will keep you from bidding too high. You must buy low so that you can sell low, so you need margin. So make sure that you know what your exit strategy is before you buy. I'm Ted Thomas.